Hello creatives! In this video, I'll share 10 assets that are making people rich to motivate you to start investing in the right money-generating assets. According to Robert Kiyosaki, rich people acquire assets while the poor and middle class acquire liabilities which they think are assets. So, what are assets and what are liabilities? I'll use Mr. Kiyosaki's words again to explain the difference. He says, assets put money in your pocket whether you work or not, and liabilities take money from your pocket. I'll use a home example so you can understand the difference better. When you build a house to rent out, the house becomes an asset. However, if you move into that house, it becomes a liability. How about a car? If you buy a car to rent out and use on a ride-sharing platform, it becomes an asset. Conversely, if you use the vehicle for your day-to-day errands, it becomes a liability. Now that the difference between assets and liabilities is clear, let's talk about how you can be rich. I'll talk about 10 income-generating assets that the wealthiest people in the world benefit from. Watch out for asset numbers 7 and 8. They are, without a doubt, the best-kept secrets of the rich and my overall favorites. But before then, if you are new here, consider subscribing to this channel to continue receiving great videos like this one. Don't forget to hit that notification bell so you get informed every time I publish a life-changing video. Let's get started with the list. Number 1. Dividend-paying stocks. Generally, dividend stocks are an easy way for ordinary people to own publicly traded companies. Mind you, you get to become a shareholder in a big company without having to spend too much money. Each time you buy stocks, you become a part owner of the company, which warrants your dividend payouts when it makes a profit. Apart from dividends, you can also make money when the stock prices increase, which we call capital appreciation. Stocks have always paid the best dividends for those who are patient. One of the most notable beneficiaries of dividend-yielding stocks is Warren Buffett, who argues that the stock market is designed to transfer money from the active to the patient. Overall, when it comes to owning dividend-paying stocks, talk to a stockbroker. The takeaway: inquire about the best dividend-paying stocks from your stockbroker and spread your risks across different publicly traded companies. Number 2. Rental property. Rental property prices are always rising. No wonder Andrew Carnegie admits 90% of all millionaires become so because of owning real estate. So, if you want to get rich fast, invest in rental property. Besides, it's also an excellent idea for someone who's looking for lasting wealth. You can build or buy a house or flat and start renting out to receive a rental income. The downside is that you are responsible for building facets like repairs and maintenance, which costs money. However, if your tenants pay promptly, then that's not a big deal. Some people are also exploring the Airbnb market, where they rent out rooms and fully furnished apartments and houses to travelers and tourists, so you can give that a thought. The advantage of that is that you set the price and the guests pay upfront. The takeaway: invest wisely in a rental property that brings in money quickly and expand as much as you can. Number 3. Real estate investment trusts, REITs. Real estate investing is not just financially involving, but also time-consuming. So, what happens when you want to invest in real estate, but you don't have the financial power or time to do it? Then consider investing in REITs. REITs are companies that use your money to buy, develop, and run real estate. Since you're an investor, you obtain shares that earn you dividends. By law, all REITs are required to pay 90% of their income to shareholders. That means you are guaranteed returns, provided that there's profit. Interestingly, some people have become rich because of REIT dividends. Equity Investments Group chairman Sam Zell, for example, is a billionaire mainly because of REITs. The takeaway: do your homework to identify REITs that have low risk and diversify your investment. Number 4. Certificates of deposits, CDs. A certificate of deposit is money you loan the bank for a predetermined term length as you receive your principal's interest. The term length can be as short as 3 months or as long as 5 years. Usually, you aren't expected to withdraw your money during the term length lest you risk the penalty hit. The advantage is the money grows at a fixed rate. Overall, the interest earned on the principal depends on how long you invest for. If you invest for longer, you'll make more. Certificates of deposits are FDIC insured, and that makes them low risk. The biggest downside is that you can lose your money if the rate of inflation is higher than the interest gain. The takeaway: consider loaning money for shorter term lengths to reduce the risk of inflation. You can always renew the term once it's come to its completion. Number 5. Bonds. Bonds are like certificates of deposit. However, instead of loaning the bank like with CDs, you lend to the government or a corporation. The advantage of bonds is that they are highly stable. You don't invest blindly in bonds as you get to know beforehand the returns you expect. The returns may be smaller when compared to stocks, but they're guaranteed and stable. So, if you have the patience to wait for a year or more, bonds can be your ticket out of poverty. Given that bonds are government-backed, they're risk-free, which is why they have somewhat low returns. Once a bond reaches its maturity, you receive your principal, the money you invested. Generally, bonds have a 1 to 4% yield rate, and you can buy them through the Treasury Department. The takeaway: considering that bonds are risk-free, consider long-term lengths and possibly more money if you can. Number 6. Mutual funds. Sometimes buying securities like bonds and stocks can be expensive, so what investors do is they pool their money together to buy them. That's what a mutual fund is. It allows you to own your securities that you wouldn't be able to afford on your own. Mutual funds suffer lower trading costs and are generally easy to track and access. More importantly, they allow you to diversify your investment. When I speak of diversification, I mean that you can hold different securities within one portfolio. A manager professionally manages mutual funds, so your job is only to invest. You don't have to worry about when and by how much you'll sell, as that's the manager's job. You can talk to a broker, a mutual fund expert, or your bank manager when you want to invest in mutual funds. The takeaway: take advantage of mutual funds' diversification flexibility to hold as many securities as possible. Number 7. Intellectual property. Today, the greatest single source of wealth is between your ears. I agree with these words by Brian Tracy when it comes to intellectual property. Generally, intellectual property is a collective term for products you create with your mind. Today, some of the wealthiest people in the world are so because of intellectual property. From Gates to Zuckerberg, the list is endless. You can write a book, create art, or build a product. All of those count as intellectual property, and you can protect your creation using patents, trademarks, or copyrights. Intellectual property may be difficult to procure, but once you succeed, you can build enduring wealth. That's why it's my favorite income-generating asset. It's just what I need to create lasting wealth for my kids and their kids. The takeaway: if you can come up with intellectual property, protect it, and monetize the idea. Number 8. Informational products. Here comes another favorite income-generating asset of mine. Informational products, also known as digital products, are creations with no physical form that earn you passive income. Examples include ebooks, courses, audiobooks, and plugins. I've used the term passive income because you only need to create one informational product, but you earn each time somebody buys or downloads it. People are always looking for information, and provided they continue doing so, you can always make money from a digital product. You can still turn your digital products into a physical product and even make money from them. For example, you can sell your ebooks printouts and produce a manual copy of your online course. The takeaway: create a digital product that your target market will love and prompt them to buy or subscribe to it. Number 9. Farmland. Did you know that 39% of farmlands in the US are either leased or rented? Well, that's the case, and as Russell Sage puts it, everyone wants a piece of land. It's the only sure investment. It can never depreciate like a car or a washing machine. If you can't grow grocery products or keep livestock on your land, rent or lease it to someone who can, and they have to pay you. And if you don't have land, but you have the money to buy some, you can buy it and then lease or rent that land out. That's assuming you aren't ready to go into farming, but if you are, then you'll be on your course to making money on your property. A guy like Howard Buffett the son of American investor and business investor Warren Buffett, is worth $400 million, mainly due to farming. Number 10. Fine art. Lastly, fine art is a creation meant for aesthetic value or intellectual reasons. It's a creative expression of an idea that can make you rich. Most wealthy people don't buy fine art because they have money. No, they buy the pieces because they see them as future investments. They understand the value of the artistic works, and they trust there will always be someone willing to make them a better offer. If you're a talented fine artist, it's time you make money from your remarkable talent. A painter like Damien Hirst is worth $300 million, and he continues to get rich by the day. Don't worry if you can't paint or draw. You can try sculpting, literature, or architecture. You can also start collecting fine art and selling the pieces. That automatically makes you an investor, something that the wealthiest people do. The takeaway: if you're a fine artist, start selling your artistic works. But if you aren't, consider buying and selling fine art. In conclusion, you have to start spending your money like a rich man to become one. Learn to buy and invest in income-generating assets to grow your net worth. You don't have to think any further than the 10 ideas I've shared in this video. I know this video was exciting and you loved it. Also check